Good afternoon, everyone. So I think we need to start now because it has ticked over 12:30. I'll introduce myself first and my co-presenters. So my name is Andy Chamberlain, and I'm the Director of Policy at IPSE. And I'm joined today by Inna. Inna, are you there?
Hi, Andy. Yeah, I'm here.
Hi. So Inna's our Senior Researcher at IPSE. And Alistair, are you there?
Yeah, good afternoon, Andy.
Oh, good, you are there. There's a bit of a delay there, but hopefully you are there. So, and Alice is our policy development manager. So we three will be taking you through this webinar, which is going to look specifically at sole traders and the COVID-19 crisis and what measures have been put in place by the government and what help is available for them out there, and what IPSE thinks about that and where people are falling through the gaps and what we think should happen around that as well. We also will link to where you can find more information, and you will be sent those links along with a feedback form for this webinar, which would be very grateful if you would fill out, and that will be sent to you after the webinar. So let's just quickly run through the sort of background to all of this, and then I'm going to hand over to Inna to look at some recent research that we've done on how self-employed people are feeling about the support that's available to them, and then we'll look in depth at how the support scheme works, and then Alistair will talk you through what some of the other help that's available. We'd like you to ask questions as we go through, and I can see there's already one or two in there. Oh, and actually I always ask, which I forgot to do at the very beginning, if you can see the slides and hear us, please let us know. Now, we haven't had any problems so far since doing these webinars remotely, and we do them every week, but just it's reassuring if you could just tell us in the questions box whether you can see and hear us. That would be great to know. Thank you. While you're doing that, I will just quickly explain about the sort of the recent history of the IPSE and the coronavirus and what we've been calling for and what we've got. So back in February, it became clear that to us and to many others that the coronavirus was coming and that it was not just a health crisis but an economic crisis. It became pretty clear that people's businesses were going to be very, very badly impacted by this crisis. Essentially, demand was going to completely fall off the edge of a cliff, as it has done for so many people. So we wrote to government ministers saying, look, we think that this is a big problem, and the intention of what we were trying to do then was to get it onto ministers' radar that self-employed people were very likely to take the initial brunt of any kind of economic slowdown. It's always them that gets hit first because they don't have the same protections as employees. We gave evidence. Alistair, who will be presenting on this webinar, gave evidence to the BEIS Select Committee. We've also given evidence last week to the Treasury Select Committee on this issue. And what we were calling for back then was something that we were calling a temporary income support fund, and we set up a petition. It got around 200,000, I think, over that in the end, signatories, and we wrote to the Prime Minister, and lots of other organisations joined us, and we were very glad to have them. And we were kind of going to the government with a unified voice saying we must do something for the self-employed. This was before the self-employment income support scheme was announced. Now, the SEIS, as we call it, the Self-Employed Income Support Scheme, was announced on March the 26th, and we were involved. IPSE was very closely involved at senior levels of the Treasury with setting that up and sort of feeding in our ideas of how it might be able to work. Since that time, so that was then put in place, or at least it was announced. It's still not technically in place because the government haven't actually begun communicating to those that are going to be within the scheme, but we've since then been continuing to talk with the government about how it might be improved or amended to help some people who aren't within it. And there are people out there who are feeling left behind. And with that in mind, I'm going to hand over to Inna now, who's going to talk us through some research that we've recently done looking into exactly that point.
Thank you, Andy. So I'll start with giving a little bit of a background of the research first. As you said, since March, we kept on receiving a lot of media queries by our own members, but also the wider self-employed community about the impact of the coronavirus outbreak on the sector and the type of measures that can be adopted to better support freelancers during the crisis. And we thought towards the end of March that it's a good time to do a piece of research specifically on the topic to see where the issues are. And we had a really good response rate. The survey was open between the 19th of March and 1st of April, and we got close to 1,000 responses, mostly from highly skilled freelancers working in a lot of different occupations. And we got a huge variety of people from different income levels, different age groups, and perhaps most importantly for the purposes of today's session, we got a really good split between limited companies and sole traders. So we got about 60% limited companies and 40% sole traders answering the survey, which allowed us to try to compare the two groups during the analysis. And the type of things we looked at were, for starters, freelancers' attitudes towards the crisis, how they feel about it, how concerned they are, what impact it's having on them, on their businesses, but also their personal income, and also what kind of attitudes they have towards the government measures provided. And while those were different measures, perhaps most importantly, as you mentioned, the SEISS scheme, which was announced on the 26th of March, our survey was open for a week before the scheme was announced and a week after, so that allowed us to compare how people felt about government measures before the scheme was announced and after it was announced, so I'm going to speak about that in a minute. And now we can start with looking at the actual findings of the research. From the next slide, you can see that a huge proportion, 91% of the freelancers we surveyed said they're concerned about the financial impact of coronavirus on them and their businesses. And what's interesting to note here is that that didn't differ very much on the basis of people's age or their gender, their occupation, the amount of money they earn even, and legal form. Both sole traders and those who operate by a limited company were equally worried. So this shows the extent to which within the freelance sector, everybody's been affected by the coronavirus crisis. And that's not very surprising because, as we can see from the next slide, the impact of the crisis kind of extends to the amount of work people do, but also kind of the success and stability of their businesses and also their personal circumstances and their basic income. So starting with the first stat, we can see that close to 70% say the demand for work they do has decreased. And we need to bear in mind that the survey took place about a month ago. Now this could be even higher. We also see that 45% said that they might have to close their businesses if they don't get more support. And another 45% said that, which is the most concerning stat here, they might end up with no money to cover basic living expenses such as rent and bills. There was a little bit of difference between those who operate by limited companies and sole traders. Whereas, for instance, we saw that sole traders were a bit more likely to be affected by this declining demand for work. And they were also a bit more likely to say that they might find themselves with no money to cover basic living expenses. While limited companies, on the other hand, they were the ones who said they're a bit more likely to have to close their businesses if they don't get more support in the next months. So looking at the next slide, we see that one of the key measures that can allow us to judge how the crisis is going to affect the freelancing sector and how they can financially adapt to the crisis is the amount of savings they have. So for 1 in 10 of the people we surveyed, they said that they have no savings. So as soon as they start experiencing this declining demand for work, they would need a substitute to their income. And then for another 1 in 5, we see that they only have savings that can cover them for up to a month. It's already been over a month since this crisis began, so some people are already probably at the stage when they're running out of their savings, so they have to apply for either government support or look at alternative ways to substitute their income. And perhaps the most concerning stat here is that 66%, or 2 in 3 of the freelancers we surveyed, said that they either have no savings, which covers that first group I mentioned, or they only have savings for up to 3 months. And the reason this is concerning is because even though those who are eligible for the SEISS scheme will get some support. They won't get the money from the SEISS scheme until June, and that's about 3 months after the crisis began. So for that group, in the intermediate period, they might have to look at other types of support if they run out of their savings, as our survey data shows. Another concerning thing here that's worth mentioning is that sole traders, on average, at least those that we surveyed, have less savings than limited company owners. So for instance, on average, our survey shows that sole traders have savings for 13 weeks, while limited company directors have savings for, on average, 27 weeks, which is quite a big difference. And then another thing we asked people is what other effects did the crisis have on them? And we can see from the next slide that some of these things we already mentioned, looking at contracts being delayed and cancelled, using their savings, losing clients. All of these things are kind of the key impacts of the crisis, but there is also some other things that seem quite concerning looking at the data. And one of those things is that about 40% would either have to withdraw money from their self-employed businesses or have to register for income support. Again, as I mentioned before, that was about a month ago. Now we can expect that the percentages increased even further. And it was sole traders who are a bit more likely to say that they have to register for income support, such as universal credit and perhaps the SEISS scheme. And the final thing that's interesting here is that a small but yet significant proportion, 1 in 7 of the people we surveyed, said that they are facing withdrawal penalties to access their long-term savings, such as pensions or IPSE. And the reason why this is concerning is because we already saw from the previous slides that the crisis has short-term to medium-term impact on the financial circumstances of freelancers, but for some, it already has impact also on their long-term savings later life, and would be very interesting to track this throughout the crisis to see whether that percentage increases and more people are trying to tap in their longer-term savings, and it becomes increasingly concerning. And the final thing I'm going to speak about is about how freelancers feel towards government support measures. Overall, we see that 60% of freelancers don't think that the government support scheme announced would be enough to sustain their income and their businesses during the outbreak. There's a little bit of difference between limited companies and sole traders, and that specifically after the SEISS scheme was announced on the 26th of March. So we can see that limited company directors feel a bit more negative after the scheme was announced. So a higher proportion of them don't feel certain that government measures will be enough to cover them. And that's hardly surprising because limited companies directors are not eligible for the scheme. And the opposite trend can be seen among sole traders. They feel a bit more positive. So smaller proportion of them don't feel government measures will be enough to sustain them. And I think that's a good place for me to hand back over to Andy, who'll speak a bit more about the SEISS scheme and who's eligible to the scheme, what are the groups that are missing out, and what other support is out there for sole traders.
Thanks. Must remember to unmute myself when I start talking. Thanks very much, Ina, for running us through that research. So, you know, what that showed us was that there was a difference in attitudes once the SEISS scheme came out. So for a lot of sole traders, they're thinking, okay, good, there's something in place for me. But let's just have a bit of a look at it and look at how it works in practice. So in to be eligible for the SEISS scheme, the self-employment income support scheme, you must have filed a tax return for the 2018-19 tax year. Now, if you filed tax returns before that as well, that's also fine, and that will be included in the calculation. So the way it works is this. I can never think of a very neat way of saying this, but essentially this is it. If you only did a tax return for 2018-19, because before that you weren't self-employed, perhaps you were employed, perhaps you weren't working yet, but if you only did the tax return for 18-19, then they calculate the grant payment based on how much you earned in that year, or how much you declare, your income that you declared from your profits in that year. If you did it the year before as well, the 17-18 year, they'll look at the two and they'll average them out. So if you earn £20,000 in 17-18 and £22,000 in 18-19, then they'll say they're going to give you an average earnings of £21,000, and you get 1/4 of that. That's how they'll work out. And I will talk about the calculations. We have had a question on that right at the very beginning as well. And if you did the 16-17 year as well, then they look at all three, but they don't go back beyond that. So they're either looking at 1, 2, or 3 tax years, and the most recent one of those is 2018-2019. In order to qualify, on top of that, having to do those tax returns, you must have yearly trading profits which average no more than £50,000 over those years. So in other words, there's a £50,000 cap, right? If you earn more than £50,000, if you only did the one tax year in 2018-19 and you earned £51,000, you don't get anything under this scheme. I'm going to talk a bit about what we think about that. Or they average it out over the previous years. Again, if it ends up being over 50,000, you're not in it. You're outside of it. You don't get a little bit, you get none of it. That's how it works. It's a very, very sharp edge. It's a real rough and ready calculation, this one. And you also, in order to be eligible, more than half of your income must come from self-employment in this period that we're looking at. So in other words, if you're mainly employed and you did a little bit of self-employment on the side, a side hustle as we sometimes call it, then you won't be eligible for that self-employed aspect of your income. It has to be that most of your overall income has come from self-employment, then you are included in it. The other important thing to mention about this scheme, which is not the case for the other big scheme that they've done, which is the job retention scheme, which is aimed at employees, is that you can still work and get the grant. You don't have to change what you're doing at all. So for some people that do fall within this, in other words, they did their tax returns in the relevant years, they are under the 50k cap, and that most of their income comes from self-employment, and perhaps they're actually in the lucky position that they haven't been hit too badly by the coronavirus because their particular sector is still going strong. They're actually just going to get an extra payment on top of what they're going to get right now, even though you could argue they don't need the money. I mean, everyone needs the money. Everyone needs a bit of extra money, of course, but their income hasn't been hit by the coronavirus crisis yet. They're still going to get the grant. Okay. So how's it going to work? Now, HMRC say they're going to write to everyone in mid-May to tell them that they believe that they're eligible. They will then invite that person or those people to fill out an online form, which I understand won't be too onerous, but it will just be checking that you are who you say you are. And I think they're going to ask you a question about whether you're still trading or whether you would be trading were it not for the impact of the coronavirus. And if you say yes, you are, then you will get the grant money. Now, the important thing here is that you'll be written to in mid-May. That is what HM Treasury and HMRC are telling us. That is the date that they're going for. Some people are saying, well, my friend has been written to already and I haven't been written to, and I'm now nervous that I'm not in the scheme. We are saying, HM Treasury are saying, if you've been, people who have been written to already and told that they are in the scheme, it's quite likely that that's a scam. So watch out for scams. If someone says to you today or tomorrow, you get an email, say it looks like it's from HMRC, and it says, okay, you're in the scheme, give us your bank details and we're going to make sure that payment gets to you, that's a scam. So I'm not sure how many of these scams are out there, but what I do know is that HMRC are saying they have not told anyone about the SEISS scheme yet. They have not put it into the, they have not put communications out there to tell people whether they're in the scheme or not. Now, the grant is going to cover between March the 1st to the end of May. So this is clearly a 3-month period, and everyone's going to get one payment, and it's going to be covering that whole period. So what they get, so how does the calculation work? So as I've said before, they look at the previous tax years, they average out the total income or the total profits from those tax years to get what they would say is a number which could reasonably be taken as a projection of what you might have expected to earn in this period were it not for the coronavirus crisis. They will then basically multiply that by 0.8. In other words, they're going to give you 80% of that, but just for that period. It's also capped at £2,500 a month. So the maximum that anyone's going to get out of this in this payment is £7,500. That's the maximum that people are going to get. And there won't be too many of those people, because very quickly after that, you start running into danger of hitting the 50k cap as well. So lots of people will be getting a bit less than that. So it's 1/4 of what you might be expected to earn in this year. That's how this should work. So David asked a question right at the beginning and saying, look, is the calculation 3 years returns divided by 3 times 80? Yes, it is, but also then it's divided by 4, because you're only getting 1/4. This is the payment for March to the end of May. Now, they might extend that. They have extended the job retention scheme, which some of you may have seen. The job retention scheme, which we're not going to go into any great detail here, is the scheme for employees, and also limited company directors can make use of it as well. But there's problems with that. We're not going to. We've talked a lot about that in other webinars. We're not going to focus on that in this webinar. But that job retention scheme initially was to the end of May, and now they've extended it to the end of June. So the question is being raised, well, how come they haven't extended this one then? I think that the simple answer to that is that the job retention scheme is now live. People can make applications through it right now. It launched at the beginning of last week, and looks like, you know, touch wood, it's been relatively successful in terms of people are being processed through it and money is beginning to go out from it. And so I think that then they realized that, you know, they needed, because that was being launched, they've extended it. They haven't actually launched this one yet. So maybe, hopefully, they will extend it to June, because, you know, I think that there isn't really an end in sight for this crisis just yet. And perhaps they might even think about doing it as another 3-month thing. I don't know. There's been no indication that they're going to do it, but it feels like that's likely to happen unless there's a miracle and this crisis goes away. And then the final thing I'll say is that you know, we did talk to the government quite a lot about the fact that this payment wouldn't be coming until early June. The government, I think, are hoping to get it out sooner than that, but you know, they want to under-promise and over-deliver. That's what they want to do. So it's not going to come too much sooner. You're talking late May or early June. And who knows, it might, I mean, hopefully this won't happen, but they could end up with some problem and some kind of delay issue. We said, look, that's a long time for people to wait without money. Alice is going to talk you through how you can claim for universal credit in the meantime, and it won't affect your grant payment, although it will affect the tax that you pay on it later on. You know, the government are saying we can't do it any faster than this. This is an entirely new scheme, and we're going as quickly as we can. Okay, so you know, that actually seems like a pretty generous scheme for people that fall inside it. So you know, if you are one of those people, particularly if you're one of those people, like I said, who is still earning some money right now, well, you're going to get this grant that's going to be given to you with, you know, not quite, but almost no questions asked. And you know, it's a relatively generous, in terms of the history of public policies and payment schemes to businesses, it's about as generous as it's ever been. But lots of people miss out. So limited company directors, those who are operating via their own company, when they saw the Chancellor announce this scheme, many of them thought, well, this is great, this is me, I'm going to get this grant money. It turns out, no, they don't. And depending on how you pay yourself, there's a problem around the dividends, which is the main barrier to that. We've talked about that a lot elsewhere, but we're not going to talk about it in too much detail here today. But there are previous webinars recorded, and you can find them on our website, as you'll be able to find this one on our website, where you can go into that issue if that interests you. And I'm sure we will come back to that issue again and talk about it some more. Now, this is the big one for the SEISS scheme, I think, is that it doesn't cover newly self-employed people. In other words, if you started trading as self-employed after April 2019, you haven't done an 18-19 tax return. Why would you? Because you know, you weren't trading. You're excluded from this. Now, what we're saying to the government is, hang on a minute, that tax year, the 19 to 20 tax year, has now closed. It closed about 3 weeks ago. So could we put in place a quick deadline, get people to get their tax returns in promptly for that tax year, and that will then enable them to make use of this scheme, because we're very worried about this group, and it's not a small group of people. And the government says, no, we can't do that. And the reason they say they can't do that is because they're worried about fraud. And they don't just mean, individuals, perhaps inflating what their earnings were in order to get a bigger grant. They're talking about serious organised crime, false identities, fraud, where the money then gets ferreted away some bank account in Panama, and the whole thing is a serious organised crime sort of con that they're going to extract money from the government on. Now, we have no idea how much of a valid concern that is, and we still think that we really should be trying to do something for these newly self-employed people. My heart goes out to the newly self-employed. I can see from the questions that we've had lots of questions on this. You've got people who have been perhaps working in a job for quite a few years, and they've always dreamt of going self-employed. They took the plunge, they were brave, they picked up a few clients, things were looking okay for the year ahead, and then the coronavirus hit. And now it turns out also they're excluded from this scheme. It feels like those are the people that the government should be helping, to me. And we are going to continue to push that point. And in fact, I was on a call with the small business minister just before coming on here with our CEO, Derek Cribb, and Derek raised this very issue, and he keeps on, and he was very, very strong on that issue. So IPSE is pushing on that issue, but at the moment the government are not relenting on it. So we're going to keep on pushing, but that's the government position is they will not consider that. Now, the other problem, as I've mentioned already, is the cap of 50,000. It's a very, very sharp cliff edge. And the problem with the way that this particular scheme works, of course, is that the more that you earn, this grant gets better and better and better. So if you end up with someone who was on £49,000 in the last tax year that we're actually looking at, the 18-19 tax year, well, they're going to get the 7,500 grant. They're going to get the maximum. But someone who earns just a little bit more than that, they get nothing. So it feels like that's a pretty bad cliff edge. And what we're saying is, can't we just put in place a taper that would be relatively simple to do? So essentially you'd be saying, okay, if you've earned more than 50, because the government concern is that when you get beyond 50,000, it's quite a small group in terms of the overall population of self-employed people, and many of them are actually earning mega money. They're, because a lot of people are partners in, say, law firms and things, and they pay tax in this way too, and they're pulling in around, I think the Chancellor said that once you get above 50,000, the average income is about 250,000 or something like that. Well, okay, fair enough, that's the average income, but what about the people who are earning 51,000? So if we put in place a taper, we could make sure that, okay, over 50,000 you don't get 80%, you get 70%. Over 60,000 it's 60%, etc. You can see what I mean. That would mean that you would stop way before you get to the sort of £250,000 mark, but you'd still be doing something for those people that are just over it. And we also are saying that there's a problem for people who took a break in those tax years, perhaps to have a child. Now, that's the reason is because their earnings in that tax year were not artificially low, they were genuinely low, but it was because of that one-off life event that happened that meant that they had that break. Perhaps they had a period of illness. And is there not some way we can look at to smooth that out? The government say, well, we're looking at the previous 3 tax returns, so that might smooth that out a bit, but it does smooth it downwards rather than upwards. It's hard to know how to deal with that one, because I think the government are saying we need to get something quickly out. We've got the information here. We're just going to do a calculation based on the information that we've got. If you started saying, okay, send us the birth certificate of your child or whatever, and we can do something, it does make it much more complicated. But it is the case that lots of people are missing out for reasons such as that, and we, in an ideal world, we probably wouldn't want them to be. So that's the sort of run through of how the SEISS scheme works. For those that are inside it, it's pretty good. if you're going to be written to about it, you'll get that by mid-May. So around about sort of 14th of May, you might be starting to get anxious if you haven't got one. As we're going to keep pressing the government, got a communication that is, we're going to keep pressing the government. And once we know that they've written they're going to write to, we're definitely going to be posting that on Twitter and on our website. So then you'll know, hang on a minute, I think I may have been missed out here, or it might be that they decided that you're illegible. Okay, ineligible, sorry, not ineligible. Okay, I'm going to hand over now to Alistair, who's going to quickly run through some of the other help that's out there, but do keep your questions coming in, and we're going to be monitoring. We're going to try and get to them after the next few slides. Alistair.
Thanks, Andy. I'm conscious there might be a little bit of a delay on my line due to my internet. Such are the perils of home working, but hopefully not enough to stop me from getting through the next few slides. I wanted to really just signpost other policy options that the government have made available for sole traders, things you might have missed, particularly in the last few days, in terms of loans, grants, universal credit as well. But I'm conscious we've got a lot of questions as well, and I want to leave some time for that. So this should hopefully take kind of 10-15 minutes. The first thing I wanted to flag, just picking up on that last point actually about the fact that a lot of newly self-employed people have missed out on the SEISS scheme, is that in Scotland, the Scottish government have made more funding available for small businesses, and they've specifically earmarked around about £30 million for the newly self-employed. This was announced last week, so we're still waiting a bit of detail. But essentially, the Scottish government is saying they are making grants of up to £2,000 available to newly self-employed people, and that this money will be distributed via local authorities. Again, there'll be some kind of criteria upon which you'll have to kind of, evidence that your business has been disrupted. But that is something that has been announced, and applications are due to open end of April for that, and the funds are due to get out early May. So some good news if you're based in Scotland. The Welsh government had actually opened up some funding as well for self-employed people. My understanding is that the applications have now closed for that because of this kind of overwhelming demand, but it may be worth keeping an eye on that as well if you're based in Wales. The second piece that I wanted to highlight was, again, this is relatively new, are these so-called bounce back loans. So these are essentially new microloans that you might have seen being launched by the Chancellor, Rishi Sunak, earlier this week. And I think really these are being brought in to deal with the problems at the kind of real lower small business end that group was facing with the coronavirus business interruption loan scheme, which was designed for SMEs. So essentially, businesses will be able to apply for these new bounce back loans for about 25% of their turnover, up to a maximum of £50,000. I think the minimum that you can apply for is £2,000. And the government is guaranteeing 100% of the loan and paying the interest for the first 12 months. From what I read, this should be a really kind of straightforward 2-page self-assessment type form. There's not going to be credit checks. There'll just be some kind of basic anti-fraud checks. And the government has said that it will open this scheme on the 4th of May, 2020. So I think this is something that if you're kind of being deterred from having a look at these other business loans, which I'll touch on briefly next, this could be an option. I know that a lot of self-employed people, a lot of sole traders, quite reasonably don't want to take on a lot of debt, particularly at the moment. But I think just in response to the growing demand for cash to come in at that kind of smaller business end of the spectrum, the government's really been pushed into bringing this in. As I say, if you've perhaps got a higher turnover, but you've got a real kind of clear sight of what your business is going to be doing kind of once the coronavirus is over, the business interruption loan scheme is possibly another option. So these are government-backed loans up to £5 million, and similarly to the bounce-back loans, no interest payments for the first 12 months on those. And sole traders are eligible. The only criteria is that your business activity is operated through a business bank account. And again, one of the kind of sticking points for people applying to this was that a lot of the banks were imposing quite kind of stringent lending conditions on loans, even those that were kind of, less than 200, 100,000 pounds. So the government has really pushed back on that, and they've said that personal guarantees, such as putting up your house, will not be taken for any loans below 250,000 pounds. I have to say, in IPSE's experience, we've not seen a lot of people in terms of our members or the self-employed more generally making use of the CBILS scheme, as it's known. But it is something that is there as a potential option. If you want to go to the next slide, Andy. So in terms of other things on the business and tax front, taxes, this is something that a lot of people aren't aware of, but could be of use. So the self-assessment payment on account that is ordinarily due to be paid to HMRC by 31st of July 2020, that can now be deferred until January 2021. This is an automatic offer with no kind of applications required, and there'll also be no penalties or interest for late payment if you do defer your July 2020 payment on account until January 2021. As I say, this is an automatic offer. It's also optional, so if you are still able to pay your second self-assessment, then you can and probably should still do so. But it's something that if you had tax, if you had money set aside to pay that July payment, but you now really need that to cover kind of other outgoings for this kind of short-term period until the fog clears a little bit, then that is an option that you can use. Similarly with that, if you're a UK VAT registered business and have a VAT payment due between 20th of March and 30th of June, you have the option to defer that until a later date. And again, this is an automatic offer. You don't need to make a kind of application for this. And if you're concerned more generally about taxes and things like that, then HMRC set up a kind of dedicated helpline for businesses and self-employed people. We've noted the number there. So if if you're unsure about any of these tax deferrals, if you want to have a discussion about options that might be available, then do give them a ring. We've had a few people get in touch with us to say that they've called it and found it useful. Essentially, that line is there to help people kind of come to a tailored arrangement with HMRC about making payment arrangements that if you're kind of in financial distress at the moment. So that's certainly something that could be helpful. And then in previous webinars, I've gone into a bit more detail about some of the grant funding available. I suppose I would just say two things on this. One is if you're a sole trader and you have a physical property for your business, there's a huge amount of support actually available. I think this is one of the groups that's really done quite well out of government support actually. So there's small business grant funding of up to £10,000, which is distributed via local authorities if you have a physical premises. There's also additional grant funding if you are in that position and you operate in the retail, leisure and hospitality sectors. And there's also a lot of business rates reliefs available. But I know that this doesn't fully cover the wider kind of self-employed market, but if you do have a business, then you can and should probably be entitled to some of that support. On the other hand, I would say this very much depends on the sector that you operate in, but I certainly know that in the creative sector, there have been a lot of kind of industry-specific hardship funds that have been launched. So these are things like writers' funds, musicians' funds, often organised by representative bodies for those sectors. And really, this is kind of simple application process. You note that your business has been interrupted. And you can get a kind of small grant in return. The amounts of money aren't huge, but they could be really significant. And I suspect there's a lot of demand for these as well. We've got links to all of those hardship funds that we know of on our website, on our kind of coronavirus hub. So do go and check that out if you're in particular, I would say, the creative industries and think that there might be something out there for you. And then the final piece on this is just really around what the banks and building societies have done. I don't really have the kind of scope to go into each individual bank or building society, but broadly speaking, due to action that the Financial Conduct Authority has taken, they have undertaken a kind of range of actions that might be helpful to you. And this includes includes things like you'll be able to access savings and fixed term accounts with no penalties. You won't face fees for missed payments on credit cards, loans, and mortgages. And there's been kind of changes to credit limits and overdraft facilities as well that will possibly help you with a bit of extra borrowing as well. And then lastly, just on kind of mortgages and rent, again, mortgage lenders have announced support if you have to take time off work because of coronavirus, and you can kind of arrange repayment holidays of up to 3 months. That includes buy-to-let mortgages as well. And just for renters, there is at least a bit of breathing space. The government has announced some emergency legislation to suspend kind of new evictions from social or private rented accommodation during this crisis. So your landlord will not be able to apply to the court to start possession proceedings until you've missed rent payments for at least 3 months. I suppose the upshot of that is really, you know, if you're concerned about your personal finances, speak to your banks, speak to your lenders, because often they'll be able to kind of show a bit of flexibility at the moment due to some of the measures that the government has brought in. And then lastly, I wanted to quickly just talk about universal credit. Wait for Andy to flip the slide over. So again, as I've said on previous webinars, unfortunately, we may do a dedicated one on this in future, because I know that we do have a lot of questions on this, but we don't quite have enough time to go through, you know, all the complexities of it. The big thing that we would say is, you know, the amount that you'll get is really entirely down to your personal circumstances. But universal credit, I think, shouldn't be overlooked as an option, either if you've seen your income kind of fall completely, or if it's just dropped a little bit. It is, you know, it's a support system that's designed to help people both in work and completely out of work. And the government has made some quite big reforms to it, specifically to help self-employed people, including sole traders, to access the scheme. So they've removed what was known as the minimum income floor. And again, don't need to get into the full details of this, but this was one of the big constraints on self-employed people using universal credit. It would basically give an artificial forecast of your earnings, and often the amount of money that you would get in simply wouldn't match up to the amount that you needed to come in. I think I would say kind of 3 big things to be aware of. Firstly, on eligibility, unfortunately, and again, this is something that IPSE has kind of called for in recent weeks. Unfortunately, there's a savings threshold of £16,000. So if you have £16,000 of savings, then you're ineligible for universal credit. Between £6,000 and £16,000 of savings, that will be factored in to the amount that you can claim, and below that won't be counted at all. But that's just something which, anecdotally, again, from people that have been getting in touch with us, we've heard a lot of people kind of unfortunately coming up against that savings barrier. A second thing is, as Andy touched on earlier, in relation to how it interacts with the self-employment income support scheme, the government has updated its SEISS guidance, and it basically just says you can make a claim for universal credit while you wait for that grant to come in June. It won't affect the amount of that grant, and it doesn't mean that you'll have to pay that grant back at all. The only thing you need to be aware of is that you should record the grant as part of your self-employment income once you've received it, and that in turn may affect the amount of universal credit you get. Now, this will not affect your universal credit claims for earlier periods. So if you're already claiming it, or if you claim, say, between March, April, May, then it won't affect those claims. But going forward, it will, is my kind of understanding of the government guidance at the moment. And then the final thing on UC that I would flag, which kind of touches a bit on both, is that the government has also confirmed that for people who are sole traders, if you've got, you know, business assets in a business account, so including savings for tax liability, this is not counted towards the capital and savings limit in universal credit. So basically, if you have money in a business bank account, again, this is quite helpful thing for sole traders to bear in mind, is that is not counted towards that kind of tricky savings limit. So it should, in theory, mean that you can kind of apply safe in the knowledge that, you know, that will not be taken into account. I think that's it. As I say, we've got a bit more information on our website about possibly how much you would be able to claim. The basic amount has been increased slightly through the last few weeks as part of the government's measures. So the universal credit is undoubtedly a more generous system now than it was 6 weeks ago for self-employed people, although I completely recognise the amounts available are still not huge. And I would say if you're kind of seeing it as a potential option, there are a number of kind of really good online calculators. We've noted one there, entitled to .co.uk, where you can kind of do a quick input of your personal circumstances, and it will come up with a kind of calculation as to how much you can get. But I think that's really it for the welfare system. I've put a note there at the end just about employment and support allowance. That too has been kind of made a bit more generous. But the only circumstances in which you could really, we would kind of highlight that is for those who are disabled or those who have coronavirus directly. It's really intended as a kind of health related additional kind of piece of welfare support. But I think that's it. And as I say, conscious that we've had a lot of really good questions, so keen to get onto them. But I'll hand back to Andy just for a wrap up, if that's okay.
The mute button foiled me again. Thanks, Alistair, very much for that run through. This is our last slide, so we do want to get onto the questions, but just want to highlight to you that there's a series of links here which you will be sent by email as well, but you can sign up to our newsletter. Do go onto our website. We're keeping it updated with information, so there might be, as things change, go on there. There's information about how to join IPSE if you're interested in doing that. You can send your case studies into that email address, because we're collecting people's case studies so we can use them. We can say to the government, look at this example of how these rules aren't working for this person or that person. And the research which Ina ran through, if you'd like to see more of that, that's in the final link there. So yes, you will be sent a feedback form. We're going to try and do that today, but it might come to you within the next 24 hours. You're going to get these links and a feedback form. The recording of this webinar will also be available on our website, so you can watch it back there. Now, getting on to a few questions that I've been sort of frantically trying to sort of jot down as we're going along. And if my co-presenters want to butt in and say that they've noticed a good question as well, please feel free, because we've had quite a few excellent questions. Jordan mentioned that he noticed that in Scotland, they have put in place measures for the newly self-employed. And does that not raise the question of why can't the UK government do something like that? Of course, it does raise that question, and we have pointed this out to the government too. We're saying, look, this is a group that it's unfair that this group of people who I think we're all in agreement we want to get some support into, they're exactly the sort of people we want to get support into. It's unfair that they are being excluded from this, and surely that there's something we can do. Our view is that we could do the tax return and get that in, so it's nice and simple and straightforward, and it easily gets them included in the scheme. But Scotland, there may be another way that we can get help to them. We're all ears, and we're very happy to work with government on a solution to that. And let's have a look at that Scottish example as a sort of to see if we can learn something from there. Jordan, we completely agree with that point that you've made. Here's a technical one for you, perhaps Alistair. Can you be eligible for the SEISS scheme and the job retention scheme at the same time? So I'm imagining there that this question is imagining a world where someone is partly self-employed and they would have to get most of their income from self-employment in order to be eligible for the SEISS scheme, but they also have an employment which they've been furloughed from. I actually think that you could be potentially in both schemes, but those cards would have to fall in the right way for you. What do you think about that, Alistair?
Yeah, I think I would probably agree with that. I think it would be, I think probably getting the clarification that you are eligible for the SEIS is the key thing there. But no, I think that's true. I think generally what my interpretation of a lot of these government schemes is that they are all kind of operating sort of in silos, and they're not intended to affect each other, which I'm kind of particularly making this point in relation to universal credit and SEIS, because I know that we had a lot of concerns about that. But I think they're all kind of standalone, and if you're lucky enough to kind of fall into both buckets, if it's SEIS and JRS, then I don't really see any reason why you shouldn't be able to be in both. That would be my interpretation anyway.
There's a few questions on the bounce back loans as well, Alistair. So we've got one question saying, do they come via the banks? And I think the answer is yes, they do. So you go to your bank and ask about the bounce back loans, and they should be able to talk to you about them. And apparently those loans are going to be available from next week, I think I'm right in saying. Now, we've had problems with the SIBLs, haven't we, Alistair, which you mentioned. You know, the government announced there were going to be these wonderful new loans available and everyone was going to get the money terribly easily, and then it turned out it wasn't like that at all, and the government have had to come back a couple of times to kind of put in place new restrictions on the banks to ensure that money gets out. I think I'm right in saying the idea behind these ones is that they're smaller loans for smaller businesses and the government are backing them 100%, which means the money should go out much easier. That's clearly the intention, but yes, go to your bank and
just to
get that.
Sorry, Andy, just to butt in just on that. Yeah, the scheme will be delivered through a kind of network of accredited lenders in the same way as the SIBLs one is. So you know, there will be kind of decent, you know, legitimate lenders involved. As Andy says, the only difference is because the government has introduced this 100% backing, this 100% guarantee for the loans, there's much more of an incentive for those lenders to lend, basically. One of the tricky things with the SIBLs is that it's only an 80% guarantee. So we would hope that the money gets out a bit quicker under these bounce back loans.
And then there's a question from John which says, will an application for a bounce back loan affect the SEIS? I think the answer is no. I think that, you know, the SEIS is based on what you did before, but they are actually changing the rules a little bit as they go along with the SEIS. And in fact, it's an opportune moment for me to correct something that I may have misled you a bit earlier. There is now going to be a question in the SEIS process which says, have your trading profits been affected by the coronavirus? I was suggesting earlier on that, you know, you might be sat there and actually doing a roaring trade and everything's fine, you're not affected at all. In which case, the government might look to say, well, you shouldn't get the grant then under SEIS. I'm not quite sure how they're going to work that out though, and it might just be a simple question that they're going to rely on you to be honest about. But yeah, so will the bounce back loans affect the SEIS? I think the answer is no, but these bounce back loans are new and the government could come in and tweak the rules around the SEIS in light of it, but I don't think so. Any thoughts on that, Alistair?
No, I think that's correct. There's this kind of similar question along that vein, which is basically asking, you know, what does more than half your income must be from self-employment across this period mean? Is this period all 3 years up to 2018-19? And then the example the person's given is basically saying, so if my self-employed income for the 2019-20 tax year dropped below 50%, can I still get the SEIS? And I think we just to kind of reiterate the point, really, the SEIS is very much just based on that past tax history. So as Andy says, there'll be a slight qualification in terms of how your trading profits have been affected for 19-20. But if your self-employment income has dropped below 50% for 19-20, that should not affect your SEIS, you know, eligibility, provided that you did meet that criteria for the past past year and past 3 years, if that's applicable. Does that sound about right, Andy? I've probably not explained that in the most crisp fashion.
No, that does sound about right, Alistair. Thanks. And just one extra caveat to that is that I also think there is going to be a question when you come doing this online form for the SEIS, which will say, were you still trading in 19-20, and are you still trading now, or would you be trading were it not for the coronavirus? So as long as you were trading, even if you also had an employment in 19-20, and even if that made up more than half of your income in 19-20, for the calculation on the 50% thing, we're looking at 18-19, or an average of 16-17, 17-18, and 18-19. It's so awkward how the tax years fall, isn't it? It makes explaining this stuff so much harder. But that's what yes, you look at the average of those and you say, first of all, did you get more than 50% on average in those 3 tax years from self-employment? And then they say, and did you earn over £50,000 in those 3 on average in those 3 tax years? And you have to get that right in order to qualify for the loans, for the scheme, for the grants. Sorry, it's not a loan, it's a grant, it's a scheme. You get given the money.
There was a question.
We had a few.
Oh, sorry, Andy, go.
No, go on. You point one out. Go on.
It was just a very quick one. Just somebody asking, will the grant be subject to tax? And the answer to that is yes.
That's correct. It will be subject to tax. So it will basically be accounted for in your tax return as if it's income. So and then it will be added to what other income you do actually earn in the year. And then you will pay tax on that as if it was any normal income, basically. That's how it works. Now, Carolyn, I noticed that you've queried my point about the fact that people haven't been written to yet and been told that they are going to be eligible for the scheme. Now, I believe that I'm right in saying that no communications have gone out from government about this at all. It might be that in the instance that you're talking about, someone has been told, look, it sounds to me like, because they were having a query about something else, it sounds to me like you're going to be involved in this scheme and you will be written to. But if you want to contact me after, I'll try and email you. So I think I can get your email address, Carolyn. So I'll try to contact you so we can work that one out. But as far as I know, to the best of my knowledge, and I've had recent conversations with HMRC and HMT on this, they have not communicated to people who are going to be eligible for the scheme yet. And they intend to do that by mid-May, they say, so no firm date on that. And we're going to try and chase that up. And once we know what the date is, we will tell people.
There was a couple of people who'd asked kind of in what form HMRC will be contact people. They say kind of in writing, but we don't know whether that's, online, whether it will be through email or you'll get a letter in the post. I don't actually think we've had any confirmation on that yet, Andy.
No, we haven't. I mean, what I rather suspect they might do is they might do it in a similar way to the way that they prompt you to do your tax return. So any of you that do a tax return, you might be aware that sometimes you'll get a text from HMRC which will say, look, your tax return is due. Log on to your online portal, you put in your reference number, and then you receive communications via that. I rather suspect it might be a similar way to do it as something like that. But they won't simply just write you an email which has all this information in it saying, yeah, so we think that you're going to get this scheme, so let us know how you want us to pay you, that sort of thing. Be wary of messages that look like that. I mean, I always look at the actual email address because very often it will look like an HMRC email, but if you look at the email address it's come from, it's sort of a gobbledygook code in the email address, so it's kind of a giveaway. That's not a proper email. It's probably worth saying that a lot of the officials that we've spoken to have been working round the clock to get the job retention scheme up and running. That's now kind of done, and it looks like it's running fairly well. So my understanding is a lot of those people have now moved on setting up this scheme. So I think we're going to be able to get a bit more clarity on how this is going to work over the next week or two, and we will be able to report that back via this webinar, via our by the webinars that we do regularly, and also via our website as well. So keep checking on there. I noticed some people querying the point around, the only help that they seem to be able to get is what they're referring to as debt options. In other words, yeah, you can go and get a bounce back loan or maybe even a CBIL, but then you end up landed with debt. I think Alistair mentioned this earlier. I mean, overwhelmingly, the members that we've spoken to or have contacted us have said exactly that they don't want to end up with a large amount of debt. They want to, their hope is that as we emerge from this crisis, they'll still have a business there, they won't have lots of debt, and they can really go on and become profitable. And that debt will slow them down and maybe even prevent them from doing that. So I totally get that point, and we are making the same point. That's why we think that this scheme is so great for those that are in it, but it's for those that are outside of it. You know, we're saying, can't we get more people into it, or can't we set up something similar for others that don't quite meet the criteria? That's essentially what we're calling on the government to do.
I've seen a couple of people asking about the kind of the grants for those with a business premises, including one which says quite reasonably, what if the HMRC letter goes to their business premises, which is currently closed? I think that particular issue has actually been raised, and the intention is for all businesses to be contacted electronically at the moment, from what I've seen. I think the only thing I would say for those who have premises and haven't heard anything yet is there's a real difference at the speed at which local authorities seem to be contacting people. Some are doing much better at getting that business grant funding out much quicker than others. So I would say if you're slightly panicking and if you haven't heard anything, but you think that you should be entitled to one of those business grants or funds that I mentioned, if you have a physical premises, then contact your local authority. I would say just contact them directly, and they'll just be able to cross-reference that on their kind of massive sheets of information that they'll have at the moment.
Thanks, Alistair. We're just about over time, but someone has actually, I've missed D, who's asked a few times to clarify the position on partnerships. The position, without going into your question in too much detail, the position is that yes, members of partnerships can make claims for the SEIS grant on an individual basis. So it won't be that the business is doing it, it will be the individual partners. And HMRC will look at the partner's share of the partnership profits to determine if the partner qualifies for the grant. And therefore, and then the calculation will apply on the 80% thing to work out how much they will get. Now, I think that there is a bit of confusion around how do you divvy up what partner is actually getting what, but there's going to be some, and it's probably a rough and ready calculation done there to work that out. I know that probably doesn't, you probably already know that, Dee, and perhaps that doesn't answer your question fully, but that's about all I know on that one at the moment. So I don't know if Alistair has anything to add on that one, but I think that's all we know on it at the moment.
No, I think that's right, Andy.
Yeah. Okay, well, look, we've gone beyond time. Thank you so much for joining us today, and thank you for sending in all your brilliant questions. If you haven't had your question answered, I'm very sorry. We've had lots and lots of questions, and we've tried to cover quite a few of them, and we're going to try and get better at answering more and more of the questions, because in the feedback forms we've had previously, people have said, look, you rabbited on too long and didn't leave enough time for questions. We're trying to get better at that. We will keep note of your question, and we will try to address them with our updates on our website. So if people are asking us the same question, we'll include something on it. We have a frequently asked questions page on there, so you might find the answer to it in there. So look, this is a very, very tough and challenging time for business, and a very worrying time for everyone. So we're trying to do our best to get answers for businesses out there, and keep coming back to our webinars, keep looking at our website, and stay safe. Thanks very much. Bye.